What's up, studs and studettes? Welcome to another Big Stud Podcast interview. As you guys have seen, I haven't been doing as consistent on the interviews on Wednesdays. You know, the Mike's Money Motivation, they Ask Mike Anything's on Fridays. We'll maintain consistency. But to be honest, I kind of ran out of really great people to interview. And I'm not just going to interview people. So I'm being a little more selective. So you might see some inconsistencies with episodes being distributed on Wednesdays. But I've done like a couple hundred of these, and like at some point you run out of people you actually want to talk to. And I'm not just going to jump on an interview with somebody just to create a piece of content at this point. Not when I'm releasing like 3 episodes a week of the podcast still. So today's guest is somebody I've known for a long time. High energy individual, somebody who, you know, has been through the gamut of betting on himself, going out on his own, breaking the mold, doing something a little bit different than his industry standards or predecessors would say is acceptable. And he's really kind of attacked the credit card processing space from a how to give enough information to business owners to make a decision. And, you know, he developed a process, he developed an app, he developed information transfer, and he's developed an incredible business around payment processing. So Adam, welcome to the episode, man.
Thanks, man. I appreciate it. I'm happy to be here. When you hit me up and asked me to come on, I was like, oh, hell yeah. Definitely down to chop it up and hang out with Mike. It's been a minute, and
It has been a minute.
glad to be here. So thank you.
Yeah, no, we met originally probably four years ago or so through Apex. You know, we were both in the executive program, and we both kind of, you know, built a brand around the same cadence, the same time frame. And you know, you've been doing a really great job differentiating yourself in this space. So, you know, I guess you do payment processing, people get that, but you specifically built this rate tracker to allow people to make decisions around the expenses related to payment processing. So why was that so important to you? And I have to imagine that ruffled some feathers in the industry. Not that people, I think, lack integrity and want to take advantage of people and want hidden fees all over. I don't think they're intentionally doing that. Maybe some are, but I don't think most are. But you went the exact opposite way. And so I want to share with everybody what the rates are, why it's happening, what's happening, and how to make decisions. Why was that so important to you? And then I want to get into like, what is it and how does it actually help somebody?
Dude, that's a great point. It was important to me because I've always thought that integrity and accountability are great things to have in business. And like in the payments world, like anyone that has taken credit cards before, um, not with like the normal companies that everybody knows, like PayPal, Square, and Stripe. There is a whole gamut of other solutions out there that exist. And I think that it is very expensive. And I think that the industry has a lot of jargon and it's so complicated that it creates a natural landscape for bad players to steal from good, hardworking people. And I think that small business is America and we should protect them. And I think that some sort of ethics or standard of integrity that needs to exist in my industry, it needed to be built. There was nothing like that existed. I had this idea that popped in my head. I'm like, what if there's like a way for a business to just keep track of their all-in expenses every month and get a text and an email with that data? There wasn't, so I built it, and then here we are. And we're just starting to get some traction and figure out like what the end user wants, where we're going to go with it. It's really cool actually, because that's a whole different game. Like building software is a whole different game
Yeah,
than
it
building
is.
a payments. Yeah, as you know, right?
Yeah,
It's different
yeah.
than building a payments company. And from what I grew up in and what I knew, like I started in the industry in sales. The first company I sold for, they got acquired for 4.3 billion. They changed dramatically and they started screwing my customers. And I didn't align with that. So what I did was I started my first payments company. And I was like, I can do this better. I'm going to do it myself. They're still way bigger than we are, but at the end of the day, we're doing good business and we're held accountable. And that need to create some sort of standard and solve the problem on a macro level for small business. That is where that came from. That's why I built Rate Tracker, and it fires me up to no end.
And so like, how do you balance then? So you own a payment processing company now.
Yep.
You also are responsible for putting out the best analytics on someone's actual processing expenses on a monthly basis.
Yep.
How do you balance keeping it competitive and also keeping your business profitable? Because you're still a for-profit company, right? You
Yeah.
know, processing is still how you pay for your stuff, how you pay for employees, how you pay for the office, how you pay for the luxuries in your life. How do you balance giving out that information and maintaining competitiveness while also protecting the profitability of your company? Because I have to imagine, like, there's a reason these companies charge so much, right? There's a reason the rates are what they are. And I think some companies are over leveraged. They have way too much headcount. They have way too much real estate. Like these big, like the Squares, Stripes, PayPal's, they just got so big. They have so much overhead that like it just is expensive to run. But how are you specifically analyzing that as a payment processor while trying to stay competitive in the marketplace, but also maintain profitability? Because that has to be a balance that you're looking at on a regular basis.
For sure. So, since COVID and inflation, most businesses are now passing the fee off to their customers. So, like if you're a pizza shop, you're not going to pay processing fees anymore. So, like your point of sale gives you the ability to compliantly present two price options. So you have a cash price, a credit price, and effectively in that situation, the business no longer pays processing fees anyways. And at my payments company, about 80% of our new clients every month are opting into that type of program because they don't want to pay for people's points, perks, and miles. There is still a handful of people that would never do that. And those are the ones that are like what Rate Tracker solves the problem for. So ultimately, the ones like when you go to the bar or the pizza shop and you pay a 4% higher price to pay with credit, we love those accounts. Those accounts have bigger margins than like if the merchant pays the fees, because we would never price an individual pizza shop at 4%. But what happens now is that there are so many, like, technology is driving our industry, and a lot of merchants out there do not want to pay for like a new point of sale. So what we do is we offer the point of sale for free, and then we eliminate their processing fees, and we make more money actually on that account. So it justifies us making that upfront investment. That's just like one part of my business. I believe we call that low risk, card present. So think like mom and pop shops, small town America, convenience stores, delis, bakeries, whatever. And then we have this like card not present world where it's, Stripe is our biggest competitor there. We bring on new Stripe clients every day because their money's frozen or there's just typical issues. And I will tell you that I think that industry or that sector of the payments industry is going to grow more. And I'm thinking about it from a macro perspective, and I don't need to be the cheapest. Like we monitor the rate, and what that does is that tells the merchant like, hey, we're not going to screw you. So whatever way we price you at the time we bring you on, we're going to remain consistent, and you're not going to find any surprises, right? Well, why would we do that if we have our own software that keeps us accountable? Like we make it really
I can't take advantage of you and also give you all the information to tell you what I'm doing. Like those two things can't go together.
But see, they can, because it's like there's so much money in it, and we run a great business. Like my business is lean and operates efficiently. So like when we bring on new clients, the marginal cost of new revenue is so low, because we've already got the machine built, and now it's just a volume game. Like, I want to process $1 billion next year. We'll do that. And that's a big number. So
we'll get into later in the conversation. I'm excited to dive into that one.
Sure.
All right. So like in the past, I've heard, and I know I'm not the only one, that like transferring credit card processing fees to clients is illegal. You hear that a lot. I've heard that a lot in the past. Obviously, me, I'm in the home service space. Contractors, home service providers is my game. And, more often than not, those are higher ticket type projects individually. And so, passing on credit card fees is something historically was said to be illegal. And now you're saying, we'll literally set it up for you, so you don't even have to do anything. It's just all part of the process. And so what's the truth there? What is the truth on we'll say card not present or card present style situations where passing on that fee so that the consumer can decide whether or not they want to pay the efficiency fee or not you have to take it out of your pocket? How do you, what's the truth?
So basically, it's not really a legal matter. It's what Visa and MasterCard say. Visa and MasterCard, I'd say Visa in particular, like is probably the strongest organization in the world. Like something to think about is they could freeze commerce if they wanted to. So what they do, so much trillions of dollars a year is processed through their network. And if consumers have a bad experience by using that card because they get hit with a fee, or the presentation is bad and they have a bad customer experience, they don't like that. So right now, there's actually a lot of gray area and things happening around this topic in the industry, because it's like most people are doing this in some way where the cardholder now pays the fee, but there's just like, it's going to go to the Supreme Court is what I'll say, I think. Because when you like, the best way to do it, if you're a contractor or anyone that doesn't matter if it's card present or card not present, you have to have two different prices. It's all about, think about it from the end user's perspective. On the invoice, say it's $1,000.
Yeah.
They can click to pay $1,000 with ACH or an e-check. And if they want to pay with credit, then they pay $1,040 because that's the credit price, right? And so there's rules about like, you can't do that to debit cards. So it's all about the presentation. You have to have two separate prices. And like, if you're talking brick and mortar, you have to have two separate prices listed on every single item on the shelf. So hey, this one, the cash price is $1. The card price is $1.04 for that, can of sardines or whatever. Like, I don't know if that even makes sense.
That's exhausting.
Yeah, dude, it is. So most merchants are just doing it non-compliantly. They just say, screw it. I'm going to eliminate such a major cost. I'm just going to add 4% to every single one of my transactions. You can't do that. Like, you can, it's like speeding, right? Technically speeding is like, if you speed and you're a good driver, like you get back time, right? That's the reward, right? But sometimes you get caught, right? And sometimes bad things, even worse things happen. So you have to decide, like, because a lot of them just do it anyway, because they don't care. They're not concerned about like someone actually reporting them to Visa, but it happens. And so
what's the part that pisses me off? The government doesn't have a problem fucking adding taxes to everything. Why can't we add fees to everything? Well,
it's not really them. It's Visa. Because
no, but I'm saying like the fact that like there's certain industries that say no, but like go stay at a fucking hotel in Miami. You're paying like 17 different taxes to be there. Right. And it's just like, they don't like, government has a problem adding taxes to things, but I appreciate Visa specifically being we want to protect our card holders. I understand that, but I feel like it handcuffs people, man, especially into hidden fees or adjusting fees or things that change over time, especially someone who's processing multiple millions of dollars a year. I mean, it could be 2 employee salaries worth of credit card fees when it's all said and done, or more, right? I mean, I think you just closed like a $70 million processing client. That's a whole department of employees worth of fees that they're going to be saving, right? I don't know. It just seems like a gray area for sure.
It is. It is for sure. So like I'm always thinking about compliance and like what's the right way to do stuff. And like that account, that's all card not present. They send invoices. So the example I gave you, that was all accommodated, and they're going to save, like, it was like we estimated like $1.25 million, $1.25 million in fees on that 70 million. So
that's crazy.
It's a huge win. Yeah. And like, we win too on that one. And, but that, like, for them to make that decision, they have some invoices that are $250,000 in and of themselves.
Yeah.
Right. Like,
so how are you educating them to have the conversation with their end user who may not be used to that percent added, right? Because on 250 grand, an extra 4%,
$1,000,
right?
So if they don't want to pay it, then they can just do an ACH, right?
But like, how are you training, or how would you suggest, maybe you're not training, but like somebody who's not used to having that conversation, like, are there best practices? Is there a script? Is there terminology that you suggest? Because if you're a consumer, you've been in business for, let's say, 10 years, and your consumers are not used to paying a fee on top, and now you're presenting them 2 options, which I totally appreciate, you're going to have some pushback in the process.
Yep. And what you do, so it's always like 1%. There's always one Karen, right, that like freaks out about it. The person that, she spent $100 at the bar, and the fact that there's a $4 fee on top of it, or a higher price, like, she has to complain, right?
Yep.
Like, what we do is it's all about the mindset of the owners and the employees, because you have to like mentally say, you know what? Yep, I'm not going to pay for that anymore. So I'm going to flip that onto my customers. And like, so it starts with the top, just like anything in business. And then you say, hey, in order for us to serve you and to keep our prices low, we've decided to give you the option. You know, if you want to pay with cash, you're by all means, go ahead. There's a cash price. If you'd like to choose to pay with credit card, debit card, there's a different price for that. And like most people that shop it with small business or do business with a local contractor versus like a
Mhm.
big company, dude, they're not with you for your prices. They're there because of the relationship, the quality, you know, the convenience, like whatever. And like you just have to communicate that message. Like one of our people signed up, it's a restaurant that does 400 grand a month on credit cards. And they were like, you know, they got hit hard by COVID and prices are through the roof. The owner was like, yeah, man, I want to do this because switch to charging them the fee basically because I don't want to charge $30 for a pizza. I don't want to have to do that. And I'm like,
Yeah.
that's a good point. He goes, but if I eliminate, you know, 120 to $180,000 a year in credit card fees, like we don't have to increase the price of pizza and I can still be competitive. So it's kind of like just how you spin
Mhm.
it, right? Just like anything.
No,
If you just
I like that.
if they were to say screw you, we're not paying for your points, like that's definitely a worse presentation than what I mentioned before that.
Yeah,
But
but also like that's not everybody's the right client for you. You know, someone
yeah,
who's bitching about $4 on $100 bill,
yep.
you're probably not the ideal client for you. You know what I
Sure.
mean? Like
Yeah, but like
and
if
that
you're a bar though, if you're just like a local bar, um, we've seen people switch and they didn't present it correctly, they didn't hang up the signs or whatever. Like we always help them do that if they want, but
yeah.
sometimes people like legit take them down and they try to hide it. It's weird. Um, that people will complain on social media. Karen loves to go to Yelp and complain about that $4
Yeah,
fee.
that's
So
fair.
it's just like you're people are either pro business, pro small business, or they're not. There's no in between, you know? So
Do you like in that situation, would you like suggest that bar like puts in an ATM machine so they can
yeah.
like clients can get cash to help pay that bill if necessary?
Yep, 100%.
Yeah.
There's like or like just tell them like, "Hey, this is how like if you next time you come in, just bring cash and like you don't have to pay the card price." You
No,
know?
that makes sense.
Yeah.
So
So,
is there somewhere a company can go to figure out all the requirements and expectations to do this? Is there like a
yeah,
this
there's
this
guidelines and rules on Visa's website.
is it just Visa? Are they the strictest or they all have a certain level of
They just kind of
requirements?
they kind of run the industry. They kind of
Got it.
own the yeah. So, it's so cool to see like how all this stuff operates like at a macro level. Because like all we're doing is exchanging value and there's so much talk in the payments world right now about like crypto and other like the Fed Now thing, like different platforms that could potentially oust us. And so it's just a really interesting time, I guess.
So what is your opinion on crypto? Because I was gonna bring that up at some point, but like I
I
mean
think
it's interesting. I'm not in it right now. Like I kind of got out of it because I was just tired of paying attention to it. Um, but like what is your opinion on that as a future in the payment processing space?
I think that like Rate Tracker is my first software. I've been building that. I'm about to hire a fractional chief product officer to take it to the next level. The next software that I build, probably starting in like a year, is going to be some sort of crypto exchange or some sort of crypto means of sending and receiving money.
Got it.
Um, yeah, so that's how I feel about it. I mean, it's
Is that
something
like
that
with the intent for B2B purpose specifically or B2C purpose, like consumer to vendor? Like I'm at the grocery store and I want to pay for this bubble gum with Bitcoin. I can
yeah,
like is that the intent of what you're looking to do?
yeah, because like I think that something like that or some things like that are going to significantly impact my industry. Like the way we do it, we acquire volume. Like we
Yep.
process payments. Volume is what drives everything, and then we make a margin on that volume, right?
Yep.
Um, about 1% of what we process, we average is like it's a take home, right? And so, like I'm thinking that um, if we have something that can at least replace that lost volume in 10, 15 years,
Yeah.
that maybe it's way cheaper because it doesn't have to go through the banks. Like the reason why people pay 3.5% and 4% is because the banks in American Express and Capital Ones, like the ones that give away those points and perks and miles, like
Mhm.
those cost money and they come from the banks, the businesses in the form of
Yep.
higher. And like if you're building a platform that's specifically designed around like sending and receiving money, the question is like, are there rewards? You know, because that's just going to naturally drive up costs. We could create something that's super low price, and it might only take like 2 cents to move, you know, some Bitcoin back and forth. because of just the way that's designed. But I haven't gotten that far. I'm not trying to add something else to my plate.
No,
I,
not yet.
I really want to solve the problem that Rate Tracker solves. But I also know that building something that's crypto centric would be like a good, like long-term hedge against what we're doing now. So
Well, I think it is kind of ironic though, talking about points and stuff, and like American Express points, and how many people like are so excited about their Amex points, but then bitch about credit card processing fees. It's like, what do you think pays for that? Like, it's
I
like,
never
yeah, you have
thought
all these
about that.
Amex points that paid for that vacation. Every vendor who you've paid for that, just like you pay for their fucking vacations. It's just this circle jerk of money and points getting traded back and forth.
Agreed, dude. Yesterday, I was talking to the owner of one of the processors we work with. He is probably close to worth $1 billion, and
Mm.
he sent me a picture of the American Express bill. It was a little bit over $1 million in a month, which I'm like, whoa, that's cool, like to think about. And then I was like, I bet you got a lot of points, huh? And he has like 35 million points.
That's crazy.
I was just like, holy shit. Yeah. So
There was a post recently about Dave Portnoy had like 44 million points on his Amex.
what can you get with that many, man? I don't even I should go check
I'm
out my
not ready to start managing that many expenses, to be honest with you. Like, I'm not ready to have $1 million fucking Amex bill. Like, the points sound great, but what I spent to get those points makes me very uncomfortable to this. Like, I'm not ready to spend I'm spending like 150 grand a month. Spending $1 million a month just seems very,
wow. Yeah,
I'm not ready for that yet.
I know, but it's like
Be
it's
cool though. It'd be
yeah, I
cool to
mean
make that
yeah,
payment and not even have to worry about it. That'd be cool.
yeah, like he sent me the picture of it, and then he said like a nice message. He's like, hey, someday you'll be here, like you blah blah blah, keep going. It was cool. It was like a really nice thing to hear
Yeah,
from
that's
him.
awesome.
Yeah, dude. And so I look up to him as a mentor. He's definitely a great leader for me, and I've learned so much and continue to do so. This industry is wild, man. I love it. I every single day it's something new. And like tell you what, you mentioned like Stripe, PayPal, and Square. Those are the though their business model is different than ours. They don't really do much underwriting up front, and we get a lot of their clients because they're pissed off that their money got frozen. You
Yeah.
know, and that's like usually we sign. It's probably one or two a day now on average. That it's like somebody who's screwed by Stripe and they need something fast. Like that's like our most common inbound lead.
No, and look,
Sometimes,
I use Stripe. Full transparency, I use Stripe, and I've never had an issue with it. But a lot of people have, and it's because of that. I have slowly grown my accounts receivable over time. You know, if
nice.
you're a new company and you go from 7 grand this month to 40 grand next month to 100 grand the following month, they're going to hold your money for a
Yes.
long period of time. And that's because they don't underwrite on the front end. So if you
Mhm.
start making, they have, basically thresholds, right? That they say, if you operate outside of these comfortability thresholds, we're going to freeze you to then underwrite you to make sure that you can actually have the money and it actually goes through. And look, it's fraud protection for them for sure. And I understand it from their own risk analysis, but man, you can't take 40 grand of a fucking small business and hold it for 4 weeks and think that person's going to still be able to collect money in 6 weeks. Like, they're going to be
Well,
out of business.
dude, you're right. And like, here's the thing: is it's mostly about how it's presented in the beginning. Like
Yeah.
you sign up for Stripe, you get approved like that, and you can start processing. So there was nobody that like held your hand through the process and showed you how to do it. So like
Yep.
we have that happen too, just so you know. Like some of our merchants, like we had a guy last week that he's approved for a high ticket of 110 grand, and he tried to run a ticket for like 195. We still funded him his money, but like his rep reached out and was like, yo, we need congrats on this big sale. The first question is always, hey, is it supposed to be 195 or was it supposed to be, 19.5?
Yep.
It's a
Yep.
keystroke error. It's also why those measures are in place. But like he sent us a purchase order invoice, and his bank account last 3 months statements. All those three things added up to the processor mitigating the risk and saying, okay, cool, we're gonna put this money in their account, and they got it the next day. So it was like that's exactly what we do. And
It
uh,
happens, but your process is just faster because you
yeah, I
have
mean,
that point of contact, because you have that account manager that's looking out for your clients, not Stripe just freezing your account and not telling you what's going on and not when you're going to get it. Like, I personally have not had a bad experience with Stripe, but I do have an issue with Stripe and the way that they really handcuff small businesses when like you have a successful month and you're like, oh, this is gonna be great. And then they're like, nope, we don't believe you. That's our money. Hold on.
We don't believe
Like,
you. Well, you know what, man? It's their business model. Like it works. Stripe is worth probably I saw speculations between 70 and 90 billion dollars. And they were founded in 2010. So
that's
like
crazy.
I'm studying the hell out of them because I want to do that too. And
Yeah.
but like what we do differently is and here's what they did. They made it easy to sign up and
Yep.
they made it easy to integrate with software developers. You know,
Yep.
like how many softwares out there do you know that just work with Stripe or they have Stripe as an option? They're doing the same thing.
Most.
Yeah, man, it's because it's so easy, right?
Yep.
We can do the same thing, but they just have that brand presence and that marketing, like, and that simplicity that I actually duplicated that with my software. You can sign up. We had a guy, he's a roofer, last week. He signed up on Monday. He got approved instantly, logged back in, sent a $20,000 invoice, ran the transaction, and got funded. I think it was Thursday. They held it up because they're like, wait a minute, this is a big ass one on the first sale, but
Yep.
our team jumped on it and the guy got his money quickly. So, you know, it happens all everywhere. And I think that every account should have a human attached to it. When
I
you
agree.
have natural collaboration and I just don't know how scalable that is. I'm still trying
I
to figure
mean,
that out.
no, that's gonna be hard to have like the human element across the board, right? But I think especially when it comes to money management. But let's talk real quick, like quick overview. What does somebody switching payment processors look like? Because I think some people overestimate how challenging or cumbersome that might be. And so like we can use you specifically, or if you want to give a more generic what it could or should look like, but what does changing processors look like?
Man, that's a great question. So the first thing I'll say is that there's a million reasons to switch and a million reasons to stay. Sometimes it could just be like you like your sales rep or you like your integration, whatever. And
Yep.
well, like we actually would rather not even begin the process for somebody unless they've like fully decided, yeah, I'm going to do this. Like, because underwriting, we require information, we have questions, there's an application, we do most of it for you, but
Yep.
like it's you basically have an issue with the processor or you get curious and you typically what people do is they always talk to somebody they know. So it could be their banker, their CPA, whatever. And you can, you know, if you wanted to switch from say Stripe to Square, that's easy. You just go to Square's website and that, you know, that's that. You could go to there's a shit ton of companies that do what we do, right? We're not the only one that has a
Yep.
direct processor model. You know, you could research payment processors near me if you want somebody local. And honestly, it's a very simple process. Like we usually have same day approvals if we have like a full packet. And it's like pretty much the same information you fill out for when you open a bank account, right? So the name of the business, where it's located, federal tax ID, that kind of stuff. And then we fill it out for you. Most people will do it for you because it's just easier that way. And then we get approval. And then if it's, you know, if you're an e-commerce business, all you need to do is plug some stuff in and then usually run a test transaction and it works fine. For restaurants, sometimes we will program a brand new system for them, whole new point of sale, whatever. We do all that in our office and then we bring it by when it's ready and we do training, we do implementation, all that stuff. So it's different for every business. If you work primarily with contractors, a lot of them use QuickBooks or like platforms like Estimate Rocket or things like that. And the question is, can your software that you use integrate with third parties? Like if
Yeah.
you like, I'm pretty sure Estimate Rocket only works with Stripe right now, right? You know, if you have that, if you want to switch away from Stripe and you have Estimate Rocket, dude, you got to stay with them unless you want a whole new system or to run if you want to run your payments outside of it, right? So
Which would be
it's different.
exhausting. That'd be terrible.
Yeah, dude.
Yeah.
Yeah, if it's not integrated, it's like you shouldn't do that. I
Yep.
told a lady today, she messaged me from the internet and she was like, "Hey, yeah, right." She messaged me, I had a question, and she was like, "I really like my system. You know, I'm trying to save a little bit of money." And like, she doesn't do that much volume. I'm like, you can't. We could save you money, but it's not going to be worth it for you to switch. So I just
Yeah.
said,
Yeah.
stay
The
where you
savings not worth the inconvenience.
yeah, I mean, but some people just hate their system or they hate their specific
Yep.
thing. If they're motivated enough, they'll get it done. And we always say, hey, if you tell us that you want it done, it's our job to go to work for you and do it. And then we get it done and nobody makes any money until they start processing.
What
So
about somebody with like a subscription model like I have, right? So I bill people on a regular occurrence on a monthly basis. Is that, from what I've seen, I've been with Stripe for almost the whole time. Do all processors have the option for subscription reoccurring billing, or is that something that only some have and some don't have?
they all have it. Yeah. I mean, if
Yeah.
it's 2023, if someone doesn't offer it,
Yeah, they're behind.
yeah, and that's
Yeah.
okay. I mean,
Yeah.
but I would say this: if you're taking recurring payments, this isn't specifically for you; it's for anyone. Store that credit card data in a gateway or some third party space where you own it and it's secure, and you don't have to be like tied to a processor. I'm not saying it's going to happen because you do good business, but like, imagine if you got shut down by Stripe and you had all those recurring payments coming in, and all of a sudden they were halted, or that money
Yep.
was just being sent to a reserve, right? That you'll
Yep.
get 180 days later. Like, you would be in a tough spot because you'd have to recollect billing information.
Yep.
Sometimes Stripe will provide the recurring payment information that we need, such as the card number, expiration date, information surrounding the transaction.
So we
And
actually do that, because we had that issue where we changed a situation once. We had to go collect a bunch of information. So part of our contract now is a credit card authorization form that we do securely
nice,
save on the back end.
sweet.
And we actually have a automated credit card update form that we collect that we also store for future if needed. It creates a human element on the back end where we have to go in and create the subscription. Because like we collect it in one form and then my team has to go create it, but it allows us to house the information. So if something were to happen or the subscription got canceled accidentally or whatever, we don't have to go back and bug our clients for information. Then we just is there. So like that being said, where should that be stored? Like you said, like a third party, like what is a third party that that information should be stored in for proper compliance and safety issues?
So there's there's a few of them. It's called a payment gateway.
Yep.
Authorized.net is one of them. NMI is another one.
Okay.
Those are two very common ones, and there's probably
Excuse me.
50 more that I could name. Bless you.
Yep.
And
Thank you.
so yeah, like it's it I just I we see it happen a lot. So it's something that I've always
Yep.
talked about. If I say, hey, don't store your credit cards with me, store them in a gateway, I'm actually like selling against myself there. But like, that's how much I believe in like the merchant first mentality is like,
Yeah.
yeah, I want to process your payments, but like I would never want you to be screwed. Like if
Yeah.
your account shut down, because risk happens, man, every day. It's weird. Like things happen. We almost have 1,000 clients now. And so every day there's like a new risk issue because it's just so
Yeah,
we just,
one underwriter changes, they change their thresholds, or they change something over here, or a client does something new, and you're constantly dealing with fixing problems.
yeah, or like, hey, this one triggered a fraud filter because somebody, the address didn't match up. Like it's just,
Yeah.
that's the nature of the game. And so a lot of people um a lot of people look past that and they think, oh, I just want something simple to sign up, and they just do. And that's not a bad thing. Stripe does a great job with serving many of their clients, but it's like you hear of these like nightmares and you're like, how the hell could you do that to a small business? And it's like, I mean,
Yeah,
I don't think
it's
there's
either great, it's either a great experience or a complete and total nightmare. Like there's
yeah.
like nothing in the middle. Like it's either
Yeah,
goes, it either works fine or like they held your money for 180 days. Like there's like nothing in the middle.
yeah, and you know how we got that client? The big one was
Mm,
Stripe lowered their high ticket to 10 grand. They lowered the amount of trade. We got them approved for 157 grand is what they could process with one ticket, one transaction, no issue. Obviously, if it's like there's fraud triggers or something like that,
yeah.
then what, but like they can run big tickets with no questions asked, and
No,
that's what it's
that's
all
very
about.
important, obviously. All
Yeah.
right, so overarching theory, switching credit card processors, do your due diligence. There's likely challenges and hiccups along the way, no matter who you go with. There's things outside of people's control when it comes to underwriters and processors and everything else. But bottom line is find somebody who has a human element, and I agree with this, that can assist you in the situation when a problem arises. Was that
Yep.
a fair overview of the process?
Yep, I said there's a million reasons to change and switch
Yep.
processes. The number one reason is what we call trusted expert. So if you're a business owner and you have a sales rep that does your processing that has been with you for a while or vice versa, like hold on to that because that's important. If you trust
Yep.
them and they know what they're doing, then you're in good hands and you can kind of like cross that off your headache list as a business owner. You
Yeah.
know, shouldn't ever
At least
switch
for right
process.
now. at
Yeah,
least for
true.
right now.
But like, here's the thing: is if the shit hits the fan, that
Yeah.
trusted expert is going to figure it out, right? That
Well,
happens every
and
day.
also that sales reps made a lot of money off of you.
Sure.
They
Yes.
want it. So if you're switching companies all the time, you haven't built a reputation where they owe you anything yet. Right. So you
Mm-hmm.
keep that one person happy for a while. Like you've had a client probably for 3 or 4 years from the beginning that if they called you, you'd be like, bro, you've been around forever. I appreciate you. Like, I'm gonna bend over backwards, try to help you, as
Yeah.
opposed to the guy who signed up last week doing 100 grand a year in processing, right? Like, because you have to prioritize your time and your favors as well. So
Yeah,
goes
and
both
like
ways.
so many hours in the day. So like
Right.
when we have merchants, we teach our sales team like if there's merchants that are like specifically focused on, I just want the lowest rate. I just want the lowest rate. It's like, well, I don't want your business then because I'm gonna make
Yeah.
$12 a month, and I don't want I'd
Yeah,
rather
I don't want to lose money on you. Like that's
yeah
I'm not going to lose money on you saving a couple points.
yeah exactly.
All right, so you said you want to process $1 billion in payments. You made a post the other day about how much $1 billion actually is and how it kind of surprised you a little bit. I think we brought up earlier where, is it 1 million seconds is like 12 hours and 1 billion seconds is like 31 years or 12
A million
days. 1 million seconds is 12 days. Is that right?
a million seconds is 12 days, and a billion seconds is 31 years.
That's crazy.
I know, dude.
That's
It's
a
crazy.
lot of dollars. So like,
Yeah, man.
so when you're processing these payments, is it just like you took for granted how hard it was going to be to get to 1 billion in processing?
Yeah, that's
Is
all.
that really where like it came to fruition?
Yeah, and at this stage of where I am in my career, I'm sure I'm going to look back on this conversation and be like, "Huh, remember when I thought was a billion was a lot of money?"
Yeah,
Because we bring out new clients every month and we grow our volume and all that
yeah,
stuff. And like, dude, it's funny because I'm coming up on a decade in the industry. Like I started on Valentine's Day of 2014.
wow,
I sold for a company for 5 years. I had my first payments company. I left that company, restarted again almost 2 years ago. So I've been an entrepreneur for 4.5 years, and it took me 9 years roughly to process a billion, right? And
okay.
then next year in 2024, we will process $1 billion in that year. So
Yeah,
it's kind of like,
the first billion's always the hardest. The second one,
yeah, yeah. That's true. Yeah. Dude, it's crazy. It's crazy how much it is insane how much how do I say this? Just like the depths of how big that number is. And
yeah,
like that's why it's like somebody who's a billionaire, it's like what you're so rare because of how much money that is. And yes, you could say things like, "Oh, well, it's easy to do that if you're positioned correctly and all that stuff," but like still, that's so much fucking money. Like there's this thing I saw. If you make 5,000, if you made $5,000 every single day ever since Columbus sailed the ocean blue, not adjusting for inflation, you still would not have $1 billion.
that's
That's
kind of
crazy.
that's actually incredibly annoying. Like, like how hard it is to make a 5 grand a day in your pocket. There's a lot. There's a lot of effort to do that.
It
But no,
is.
but it's a testament to you being on the verge of hitting $1 billion processing year. It took you 9.5 years to earn the right to do that. I think
Yeah.
that's the part that I think most people in business underestimate. Even to get to their first million, it's going to take longer than you think it should. It's going to be harder than you think it should. You're going to lose more money than you gain on the journey to get to that first million. Like that's just the truth. And I think you've done a great job just being disciplined on a daily basis, just working your fucking ass off,
Yeah,
making
man.
sure that you're delivering a unique client experience that, because you don't get to 1 billion if you're not keeping clients too. So it's not just acquiring, you also have a good retention rate. And that's what I think differentiates good providers from bad is like, you wouldn't get to 1 billion if every month you were replacing another, like half your fucking client base. You couldn't
Yeah.
get there.
Yeah. And so like
So,
what we do with that is, and this is something to think about for anyone that has a business that provides a service, is how do you make it like it's a little savage to say this, but how do you make it hard or totally undesirable for them to switch? So like in
yeah.
my business, because it's easy to find a new processor. Like
Yeah.
we lose a client every week now. And it
Like you said,
easily,
Stripe does it, right? Stripe does it where they integrate into certain softwares and
yeah,
they probably negotiate some sort of a exclusivity agreement where like you have to use us with this, and that's what makes it hard to switch. So same
Yep.
concept.
Or like, here's an example where there's attrition is when an account leaves, and that
Yep.
happens for so many reasons. People sell a business, it goes out of business. And like my buddy owns a limo service company doing like 200 grand a month here in Cleveland. And their software that they use finally kicked out, because we figured it would happen. Finally kicked out the third party integration, and they made him go with the in-house solution, or he had to find a new software. And they know that his business is so entrenched in that software that if he actually switched, he'd be screwed. So like,
So did that company create their own processor, or are they just white labeling something
they're
else?
white labeling Stripe probably and getting it kicked out from them. But
Makes sense.
it's like, I think that's exactly what happened. That was one where it's like, damn, that was a nice account, and like you just lose it. So like my business, keeping the accounts is a lot of it's technology driven. So we put systems in that, like if we sign up a Russian grocery store, for example, and they have 5,000 SKUs and different items there, like dude, for them to switch, they're gonna have to reload all that into the new system, because that's how we system. And that's an example of a client that we just got up and running. And I want those clients for 15 years because I know how much work we do to get them on board and how to support. And it's all, retention is more important than I think now at this point than getting new business. But of course,
I've always put more money and effort into retention than I have acquisition. And that's why we've grown the company the way we have. Like, I'm never going to be a quantity environment. I'm always going to be quality. And I've probably spent 10 times as much money on retention as I have on acquisition.
That's amazing. And you know why that's even better is because you get clients that you have for life, which is awesome in and of itself. They're usually better people to work with, and they make more referrals. So you got to have both, obviously, especially if you want to grow. But dude, I look at that number, $1 billion, and I'm like, that is such a big
number, man.
It is. It's huge.
It's a lot. That's a lot of Russian groceries.
Our average client does about 500 to 600 grand a year in volume. So like 40 to 50K a month. Right. So
$1 billion is a lot of clients.
Yeah. We're going to finish this year around 500 million or so. And this second half of the year, we've been ramping up like crazy. We're having our first sales incentive trip. And dude, like anyone that has a sales force listening to this, I highly recommend doing some sort of like badass sales incentive trip, because first of all, it's the best money you can spend. It's going to be a great time, creates culture, memories. And then it gives some people something that's like hard and like
it's something to work for.
Yeah, that's what I was trying to say. Work for it. And they compete against it. It's just so cool. So that qualification just started in July, and it goes to the end of the year.
It's a great piece of advice. All right. So last thing before we call it a conversation today, if someone's interested in exploring the rate tracker environment, what that looks like, how they can figure out what's going on with them, what does that process look like, and where do they go?
So you could go to our website, just ratetracker.io, or we'll get you a link, affiliate link. You want one, and you can put it in the comments or however you structure this, and then that will send them to our software, which it's all affiliate link based, and we'll know they came from you. And we'll put that in the comments below.
Yeah, shoot. Like if you want to send me the link, we'll get it put in the show notes. So
Sweet.
Awesome. Well, Adam, I appreciate being here, man. I appreciate the information. That was definitely a solid credit card processing conversation, and I'm sure there'll be some people in my audience that'll benefit from a conversation with your team. So thanks for taking the time today, man.
Thanks for having me, bro. Appreciate it.
Awesome.